Hello, today is Wednesday, the 11th of June, 2008. This is Brian Shannon from alphatrends.net, and the market's closed. S&P 500 lost 1.38% today, down nearly $2. And you can see here that the path of least resistance continues lower on this daily time frame as the pattern of lower highs and lower lows continues to perpetuate. And where it ends up bottoming is anyone's guess. What we want to do is recognize a trend that's in place, find the low risk areas where to get involved, and then hold it as long as the market tells us to. That is, hold whatever position, and in this case the market's saying a short position is the best position right now. The path of least resistance again yesterday looked like maybe we're getting a little bit of recovery, but that failed quickly as it took out this level that we were going to watch this morning at 135.80. When 135.80 was taken out, it was clear that the sellers were back in control once again. The market then spent a lot of the part of the day just kind of consolidating here, and the inability of it to bounce kind of showed that there weren't really any buyers stepping up to the plate, and that continued downside was likely towards the end of the day. Obviously, that's what we did have. We had an attempted move past the 135 level here at about 2:15 Eastern, but as that failed to take out these highs right in here, then the sellers came back in, and of course we got a weak close. So looking back at the S&P 500 on the 2-hour time frame. I'm not talking very good here today, but obviously this has been the critical level that we were watching last week, about 137, 137 and a half, and that level has acted as resistance here on 2 occasions, and now we're seeing the resumption of the downtrend. So the sellers are clearly in control. We take a look at this inverted or this head and shoulders pattern and come up with a potential target by taking the height of the pattern, which is this bar right here I'm moving, and subtracting it from the point of breakdown, which again gives us a target down here about 130 and a half. So about 130 and a half looks to be an area where this market is likely headed. It doesn't mean that we're going to see it right away, but that's a potential target on the downside. Listen to the message of the market and remain short as long as the market tells you to. It's becoming more clear as we back away from this larger level here at about 144, 145 too, that this prior support level did in fact act as the resistance near the declining 200-day moving average. And your technical analysis doesn't have to be that complex to make it work. That's kind of what I talk about in my book. I haven't mentioned the book in a video in a while, but the only place you're going to be able to purchase that book is technicalanalysisbook.com. There's a lot of reviews on that site. There's of course a bunch of sample pages as well, and that's you're not going to find it on Amazon if you're searching in there. People have sent me emails saying I can't find it on Amazon. It's because it's not being listed on Amazon. So that's the subject again, trend alignment, and making, understanding what's going on besides just looking at, certain patterns and trying to memorize those. The market obviously continues to be hurt by the continued weakness in the financials, which again closed at a lower low. So this market remains a mess. No reason to be involved. The semiconductors broke down further. I was kind of thinking that the 31.25 might act as support, but that you want to be on high alert if it broke down through that level of 31.25. And that's exactly what we had here today early on, and the sellers came out in force, pushed it another 3% lower from that level. So the semiconductors are an important group because they tend to lead the NASDAQ. And the NASDAQ obviously had a bad day as well. The NASDAQ 100 was down 2.39%. This level that we've been looking at, 47.75, I had posted on my blog earlier in the day why I thought that might be a